Hello dear students, welcome back to our channel Bhavani Commerce Academy. Today we are discussing non-profit organization. So this is the fifth unit of BCom second semester. What are the accounts to be maintained in the non-profit organization? Here we will learn. Okay, so from non-profit organization, here we need to maintain three types of accounts. So first one is receipts and payments account. Second one, income and expenditure account. And third one, balance sheet. Okay. So receipts and payments account. So receipts and payments account is a real account. What comes in debit, what goes out, credit. It's like a cash book. So all receipts should be debited, all payments should be credited. Okay. So if you want to prepare receipts and payments account, you need to remember some points. Here I have given points to be noted under receipts and payments account. First point is, it's like a cash book. So cash book is a real account. What comes in debit, what goes out, credit. If you receive cash, that will be debited. If you pay cash, that will be credited. Okay, so all receipts debited, all payments credited. Okay, and second point is, it's related to current, past and future periods. If you have any information regarding the current year or previous year or next year, those details we need to consider in the receipts and payments account. And third point, it excludes all non-cash items. So non-cash items, if you have any credit transactions, those credit transactions we need to ignore while preparing receipts and payments account. If it is a credit transaction, there is no cash. For example, sold goods to Raju. So what is the entry here? Raju account debit to sales account. So in this, there is no cash. So that is a credit transaction. If you have cash, then only you need to write in the receipts and payment account. If you receive cash, if you pay cash, those transactions only we need to record in the receipts and payments account. Non-cash items are ignored. And next point is, starts with opening balance of cash and ends with closing balance of cash or bank. So start with opening balance of cash or bank. If you have any opening balances regarding the cash and bank, just write down debit side of the receipts and payments account, and it ends with the closing balance of cash or bank. So the balancing figure is called closing balance of cash or bank. Okay, so this is about receipts and payments account. Okay, so here we have a receipts and payments account format, specimen copy. Okay, so debit side receipts, credit side payments. Under receipts we have to balance B by D, cash, bank. So what is this balance B by D? Last year closing balance is this year opening balance. So this is the opening balance. Already I said it starts with opening balances, ends with closing balance of cash and bank. So here we are starting with balance B by D is nothing but opening balance of cash, opening balance of bank. If you have overdraft, opening overdraft, that should be credited. If it is overdraft, that should be credited. If it is a cash in hand, cash at bank, that should be debited. And next, subscription. So subscription, already I said, what is subscription? It is an amount paid by member to continue their membership in a non-profit organization. That is subscription. Every year they have to renew their membership. So that is nothing but subscription. Okay, regular membership fee we can say. Already we noted some points. If you have any details regarding the current year or previous year or next year, those details we need to write in the receipts and payments account. Yes. So here under subscriptions we have previous year, current year, next year. So these details we need to write. Okay. Next, entrance fees. Donations for building, general donations, life membership fees, legacy, grant from government, contribution for annual dinner, dividend, interest, rent, receipts on annual sports, sale of old sports material, sale of old magazines, sundry receipts. So up to here, all these are receipts only. From this, they are receiving cash. Okay, so that it is receipt. Okay, so these explanations, entrance fees, donation, subscription, and life membership fees, legacy, everything I have given explanation in the last video. If you want, that video link is in description box. Check it out. Okay. So coming to payment side, if cash is going out, that will be credited. So If you have any overdraft, opening a balance of overdraft, that should be credited. After that, if you have any payments, just you need to write over here: annual sports expenses, salaries and wages, rent, rates and taxes, insurance, furniture, sports equipments. If they purchase furniture, if they purchase sports equipment, books, so they have to pay cash. Yes, so cash is going out. So those are expenses, like payment, not expenses, payments. Audit fees, printing and stationery, honorarium. So honorarium, what is honorarium? That is given in the description box. Just check it out. Bank charges, postage and telegram, water and electricity, conveyance and traveling, repairs and maintenance, sundry expenses, annual dinner expenses, purchase of investment, purchase of furniture. So these are all expenses. Non-profit organization point of it is a expenditure. So these are all expenses. So after writing all receipts and payments, just take the balancing figure. How to take the balancing figure? If payments are more, receipts are less, that will be overdraft. If receipts are more, payments are less, that will be closing balance of cash and bank. So receipts ఎక్కువ payments తక్కువ ఉంటే closing balance of cash వస్తుంది. Okay, clear? Next, second one, income and expenditure account. So income and expenditure account is a nominal account. All expenses, losses debit, all incomes and gains credit. See here also I have given some points to be noted. It is a nominal account. Nominal account rule is all expenses, losses debit, all incomes and gains to be credited. If you have any expenditure or loss, that should be debited to income and expenditure account. If you have incomes or gains, that should be credited to income and expenditure account. So in income and expenditure account, debit side we have expenses, credit side we have incomes. Okay. And second point, only current year incomes and expenses are considered. See here, in the receipts and payments account, we take in current year, past year, future periods also. But in the income and expenditure, only we are taking current year values. We are not considering previous year as well as future year. Okay, so remember this point. And next, all capital expenses and incomes are excluded. If you have any capital expenditure or income, any capital expenditure or capital income, that should be excluded, not included. Okay. And next point is both cash and non-cash items taken into consideration. So here in this receipts and payments account, we are not taking non-cash items. But in the income and expenditure account, we are taking both cash and non-cash items. Both cash and non-cash items taken into consideration. So these points you need to remember while preparing income and expenditure account. Okay, let's see format. This is the format of income and expenditure account. Okay, debit side we have expenses, credit side we have incomes. Because it is a nominal account. All expenses, losses debit, all incomes and gains credit. Okay. See here, under expenses we have salaries and wages paid. If you have any adjustment regarding the salaries and wages, just you have to do here. Add outstanding at the end. If you have any outstanding salary or wages at the end of the year, that should be added. And less prepaid at the end, and add prepaid in the beginning, less outstanding in the beginning of the year. Okay, just you need to follow this format. According to these details, you need to add or less. You'll get outer column value. Then rent, rates and taxes, insurance premium, depreciation on furniture and sports equipment, books and periodicals, audit fees, printing stationery, honorarium, bank charges, postage and telegram, electricity and water, conveyance and traveling, sundry expenses. So up to here, these are all expenses. So expenses comes under debit side of the income and expenditure account. And comes to income side, here we have subscription received during the year. Okay. To that, we are adding outstanding at the end, less advance at the end, add advance in the beginning, less outstanding in the beginning. Just you need to follow this format for the subscription. Okay. Then you will get this value. Next, entrance fees, general donation, life membership fees, profit from annual dinner, profit on annual sports, profit on sale of provisions, rent of club hall, dividend and interest, sundry receipts, all are these incomes. Okay, so if you want explanation of these terms, just check in the description box. I have given link. Okay, and after writing all the expenses and incomes, do the balancing figure. If income is more, you will get surplus. Income is more, expenditure is less, our balancing figure will be surplus. If expenditure is more, income is less, our balancing figure will be deficit. Okay, so excess of income over expenditure. సో మన ఇన్కమ్ కంటే ఎక్స్పెండిచర్ తక్కువ ఉంటే సర్ప్లస్ వస్తుంది, ఎక్స్పెండిచర్ కంటే ఇన్కమ్ తక్కువ ఉంటే డెఫిసిట్ వస్తుంది. క్లియర్? సో డెఫిసిట్ విల్ కమ్స్ క్రెడిట్ సైడ్ ఆఫ్ ది ఇన్కమ్ అండ్ ఎక్స్పెండిచర్ అకౌంట్, అండ్ సర్ప్లస్ విల్ కమ్స్ డెబిట్ సైడ్ ఆఫ్ ది ఇన్కమ్ అండ్ ఎక్స్పెండిచర్ అకౌంట్. క్లియర్? సో దీస్ ఆర్ ద ఫార్మాట్స్ ఆఫ్ receipts and payments account as well as income and expenditure account. Clear? And next one is balance sheet. Under balance sheet, already we know left hand side liabilities, right hand side assets. So under assets we have cash in hand, cash at bank, investment, outstanding subscription. Outstanding subscription. Subscription is a income. So outstanding income comes under assets only. Interest receivable, rent receivable, prepaid expenses, stock of stamps and stationery, stock of sports material, library books, furniture and fixtures, land and building, club ground and pavilion. Okay, so these are all assets. Comes to liabilities, outstanding expenses, income received in advance, bank loan or overdraft, special fund, specific donations, capital fund plus surplus. If you have a deficit, that should be deducted. If you have surplus in the income and expenditure account, that should be added. If you have deficit in the income and expenditure account, that should be deducted. Okay, then the balance amount you need to write here. Take the total, that must be equal. Liabilities are equals to assets. Okay, so if you want, take a screenshot. Thank you for watching.